Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jay Gragnani, Senior Market Strategist at Nasdaq Dorsey, Wright, to discuss market technicals and sector and asset class leadership. Jay, it's great to see you. Welcome back to Trade Talks.
Jill, great to be here. Thank you for having us.
You got it. And let's get a quick overview on the technicals that you're seeing within the S&P 500.
Yeah, it's important, especially right now with everything going on in the markets, a lot of uncertainty happening as it relates to just geopolitical concerns, as it relates to interest rates, as it relates to a lot of different things out there. And so one of the things that we pay particular attention to is what is actually happening in the markets. How are the market participants reacting? And when we look at it from a technical lens, just in terms of, say, the S&P 500, if we look at the S&P 500, the longer-term trend on a number of different levels would be seen as positive today, whether you're looking at a longer-term point and figure chart, whether you're looking at other commonly referred to or defined trends like a 50-day moving average above a 200-day moving average. Those things from a longer-term perspective right now are positive. And that is certainly as a result of some strength that we had seen earlier this year. Now the market's pulled back a little bit. And as a matter of fact, just before coming on today, we did see some short-term sell signals on the S&P 500 chart moving into a negative trend. So as we move forward into or move through February, after a strong start to the year in January, February seen some consolidation, and you've seen the market, the S&P 500, pull right back into some support here, right in the 4,000 level. So if we break much below that, the next level of support that we'd be eyeing from a shorter term chart perspective would be in the 3960 area. From a longer term support level, around 3800 would be a longer term support. But right now, by and large, if we look at the S&P 500, longer term trends are positive, and not just from the index perspective, but also the majority of S&P 500 stocks are still in positive trends today. That number is about 70%. And I know we've talked before about the fact that when we see those numbers above the 50% level, that tends to be a relatively positive backdrop for the market. We're certainly above that 50% level today. So by and large, the trends of not only the indexes are positive, but individual stocks as well.
Where are you seeing sector leadership change?
Yes, the sector leadership positioning has been really interesting. You saw for 2 years, energy just dominated the sector leadership. As a matter of fact, last year, energy was the only sector to post a positive return. But energy has been the least important sector in the market. And what I mean by that, it's been one of the smallest weightings across major U.S. equity indexes, whether it's the S&P 500, whether it's the Nasdaq 100. Technology has been the most important sector over the years, as it's the largest, not only in the Nasdaq 100, but in the S&P 500 as well. And the growth to value trade began a couple of years ago, and you saw that play out through really last year, 2021, 2022, where value-oriented sectors, things like energy, things like industrials, those types of areas, were dominating the performance ranks. It's interesting now, you're on the verge potentially of seeing a dynamic shift back towards more growth-oriented areas. At least in the near term, we've seen technology, we've seen communication services, we've seen consumer discretionary. Those more growth-oriented sectors have been the best performing sector so far this year. Now, we're only not even 2 months into the year, so I wouldn't call that a total reversal in trend or total change in leadership, but we have seen some weakness amongst some of the energy names as well. You've seen energy back off a little bit. But if I look at the leadership trends today from a sector perspective, we're watching those changes very, very closely with energy in particular beginning to weaken a bit. Technology, communication services in particular really gaining a lot of strength. And so we'll see if those change. If I just look at it from a surface today, though, basic materials, financials, those are currently the two highest ranked sectors within our relative strength ranking mechanism. The materials sector, a lot of the metals and miners within there are strong, as you've seen some strength within some of that area, the commodity markets as well. But we'll continue to monitor that growth theme as we move forward through the end of February.
And finally, Jay, what's the top performing asset class?
Yeah, I mean, as much as we talk about U.S. and obviously it's the biggest part of most investors' portfolios is U.S. equity, at least U.S. Investors. Non-U.S. equities or international equities, if we were to look at it that way, is the number one ranked asset class within our asset class ranking, our relative strength ranking. And that's really been on the move and has come here to fruition over the course of the past few months, and really probably going back to about October. With one tailwind, that being the U.S. dollar. The U.S. dollar peaked back in October. It has backed off over the course of the past couple months, still in a longer-term negative trend, and that historically has provided a nice tailwind for non-U.S. equities. And really, if you go back since that time frame, whether you're looking at developed country indexes, things like the EFA index, or even looking at emerging market indexes, the performance since the end of October has more than doubled that of most major U.S. equity indexes. So you've seen some outperformance from non-U.S. This year, and particularly this year, you've seen outperformance from some of the more developed countries within that index, and as some of those individual names in there have performed very, very well here recently this year. So right now, international equities, non-U.S. equities would be our top ranked asset class when we look at it from a relative strength ranking perspective. And U.S. equities or U.S. stocks would be in that third position. So still within the top half of our rankings, but the nod would go to international right now.
All right, Jay, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.